Today we're going to be talking about the 3 most popular indicators to use for trend trading, aka trend following. Hey everyone, League Trading with Stocks Trade, Tim Bowen here. Be sure to like, share, subscribe to the videos, and ring that bell to be notified as soon as we drop a new video on YouTube. All right, that being said, let's get started with a little bit of kind of terminology breakdown, etc. So when we talk about trend following, trend trading, it is more, in my opinion, more of like a swing trade, which when we say swing trade, multi-day to multi-week, to a long-term investing, when I say that, multi-month, possibly multi-year. Hey, if you're Warren Buffett, maybe it's decades. Well, if you're Warren, maybe it's centuries. But anyway, this is a little bit of a longer-term strategy, which is great. I tell you, all you got to do is bring up a chart of some of these technology stocks, like one we're going to talk about today, Asana. But I mean, bring up a chart of Apple or Microsoft or Tesla or some of these multi-year, I mean, ultimately Microsoft, Apple, multi-decade breakouts. And, especially from a lower risk type profile. I mean, these are types of trades and stocks you don't have to sit there and stare at every single day and worry about some sort of 20% gap down. So especially if you're very busy or, again, you're a part-time trader, swing trading is a very great way to grow your account, get some experience, and, make some profits, obviously. So when we talk about trend following, it's a very simple idea, but I think often misunderstood. It was kind of coined, I think, by, go back to some of the turtle traders. If you're familiar with that story, definitely research that. I mean, I know I'm kind of a nerd. I like history. I particularly like stock market history. And if you go back and read and understand the story of the turtle traders, actually the funny, if you don't want to read a book, which I don't know why you wouldn't want to, but if you're familiar with Trading Places, it's kind of loosely based on the idea of the turtle traders. That funny Steve Martin and Dan Aykroyd movie, one of the greatest stock market movies ever. Actually, I mean, listen, probably one of the greatest comedy movies. I mean, it holds up well. It's ridiculous. It's what happens when they get on that train. I mean, if you're a fan of movies, there's like this flow to the movie, and then all of a sudden they get on the train and there's like this New Year's Eve party, and it's like, I think they might have embellished a little too much, of something when the shoot went there. But anyway, great stock market movie, great education. And, the idea behind the trend or the turtle traders was this idea that it was a process and it could be taught. And that's what happens in Trading Places. Dan Aykroyd's kind of the golden boy, and they kick him out on the street. And then the 2 old guys make the bet. They pick Eddie Murphy off of the street, and they're like, hey, we can teach this guy. We can teach anybody trading. And that's the, the thesis behind trend following. Check out the work by Michael Covel. I've met Michael Covel, some of his books. I read them very early in my trading career and were very influential in my swing trading methodology. We've actually got a Steady Trade podcast with Michael. He's got hundreds of podcasts talking about trend following. So the short answer, or the short breakdown is, stocks that are steadily trending higher. And keep in mind, we're talking more real stocks here versus like sketchy penny stocks. I mean, I know on the channel, we focus a lot on day trading, crazy wild stocks. Today, we're talking more real stocks, okay? The idea is that stocks in a steady uptrend, gradually uptrending in price, uptrending in volume, in a good sector, in a hot sector like technology, going back to Asana, cloud computing like Asana, they tend to trend higher. And vice versa, when they're trending lower, they tend to continue trending lower, especially when they fall out of favor. Let's say, I don't think it's happening anytime soon, but let's say for whatever reason, cloud computing apps or, having your data in the cloud, let's say that goes out of favor for whatever reason. And then Asana tends to put in multiple red days in a row, multiple red weeks. Well, then there's a trend shift and it's probably going to trend lower, and it would be a solid short sell. Today, we're going to talk about the long side of things, especially from a longer term hold. So when you've got that hot sector, higher uptrending volume, hot sector, good breakout, breaking through whole dollar, half dollars, you can see this was a great breakout at 50, at 75, at 80, 90, even into 100. And here we are. We may touch 120 before the end of this video. Who knows where to be at by the time you see it. But what we're going to look at is how do we determine that steadily uptrending stock? And I've got those 3 indicators that we're going to talk about. Mostly it's moving averages. And when we talk about moving averages, there's a lot of different time frames, and they kind of go in and out of vogue. Right now, the most popular is the 20 period moving average and the 200-day moving average. Those are kind of the 2 in vogue. Now, again, if you're watching this video 6 months, a year from now, they may start focusing on different time frames. Understand that technical indicators are a lot like fashion. They tend to go in and out of style. And the reason I bring that up, that understand that the best technical indicators like VWAP, the one we mostly focus on from a day trading perspective, when they're in vogue, when they're in fashion, they become a self-fulfilling prophecy. So when that 200 and that 20-day average cross happen, it's setting off alerts on a lot of traders' desktops. It's triggering algos. There's a lot of algorithms that are trading that. So you want to join that trend. Next is our momentum indicators, which are, again, those breakout levels. We're looking for multi-day, multi-week, multi-month, multi-year, all-time breakouts, 52-week highs. Those are what I consider to be the momentum indicators, because as you're breaking through those levels, that goes back to those whole dollar, half dollar areas as well, and the century mark, they call it, with 100, or whether it be a 50, or whether it be 150 or 200, you'll see volume come in, you'll see those alerts come out, and people tend to pile in to those key type levels. And that's when I think of a momentum indicator, it's breaking through those levels. And let's say, Asana obviously has red days. So we're going to look for those reclaims of breakouts that sets off those alerts. I keep mentioning that point. What we're trying to do with these entries on these breakout, these swing trades, we want to join the trend ultimately. So why I keep mentioning those alerts is we want to be joining the big guys. Ultimately, listen, if $1 billion hedge fund is buying Asana, I joked about Warren Buffett. Warren Buffett's buying Asana. What do you think you want to be doing? Follow the money, follow the smart money, follow the smartest money. And that's what they're doing. So you want to join them. Next is we're looking at those trend lines and those chart patterns. And, trend lines are very unique to the person. And, ultimately you can, it's really just looking for those higher highs, those higher lows, and looking at that, that kind of steadily uptrending stock, and then you're looking for that trend break. So I just drew a quick line here, kind of drawing this, and then I'm going to give another one to this current breakout. And what I look at is I tend to focus on the low of the day. So you can see it's Asana, was steadily uptrending all through the summer and the fall, and then they had earnings and really going vertical. And I think that's the power of drawing these lines. As you can see, this stock steadily uptrending, now going straight vertical. But if you're swing trading this stock, you let this trend line continue and you let it work, and then you're selling on that trend break. And again, trend line's very unique to you. Use it how you want. A lot of the times you'll see traders kind of average the candles. So they'll kind of draw that trend line through the bodies of the candles. I like to focus on those lows of each candle. If you don't understand Japanese candlesticks, you need to. I don't care if you're day trading, swing trading, or investing, you need to understand candlesticks. We got a bunch of videos. Check it out. Take advantage of the archive. But because to me, if it's that low or higher low, then that's very, very bullish to me. The higher highs, listen, these stocks are volatile. They chop around. But as long as that stock is holding a higher low, that's very, very bullish to me. And that's a trend I either want to join, or if I'm already in the trade, then I'm chilling and I'm letting it work. So that being said, Again, I really, really think even if you're a short-term trader, Trend Following the Book, which is one of Michael Cavell's book, I still remember reading that. I don't know. I always remember it because a lot of breakthrough moments, and I remember exactly where I was. Tequamanon Falls in the Upper Peninsula of Michigan, beautiful, beautiful place. Camped there a lot with my kids, especially when they were little, and I remember being there by the Tequamanon River, inhaling this book. I mean, you're talking, probably 11, 12 years ago, and I still remember it. Mainly the beautiful sceneries, but then coupled with just recognizing this simple idea of joining the trend and leaving when the trend breaks. And great book. Again, Cavell's got a great podcast. He's got several books. Understand the turtle traders. And even if you're not a long-term holder, I firmly agree with the idea behind the turtle traders. And that idea boiled down to, I think, and I firmly believe this, anyone can do this. Okay, now you have to put in the work. Okay, it's not like I can just give you this piece of paper and you'll magically be profitable. But if you're passionate and you put in the time, the work, and the effort, I think anyone can do this. And that's the basis behind the thesis of the turtle traders. They just put an ad in the paper and like 95% of them were successful because they followed rules. If you're trying to figure out trading rules, if you're trying to figure out discipline, if you're trying to figure this out, check out the Steady Trade team. Okay. I love teaching this stuff, and I truly believe if you're, as I already said, if you're very interested in this, if you're consumed by trading like I am, 18 hours a day, I'm thinking about trading, it can be taught, and I can help you do that with the Steady Trade team. Check out the link below, and we'll see you next time.